So, NIO has done it. They've hit a milestone that took them 11 years to reach. But here's the catch. They've done it in the middle of an absolute battlefield. We're talking about the toughest, most brutal EV market in the world. So let's unpack what this really means, shall we?
Okay, let's kick things off with the number that's got everybody buzzing. $100 million. Now, that's the high-end forecast for NIO's quarterly operating profit. For a company that's been, just burning through cash for more than a decade, this is so much more than just a number. It's a signal, a huge one, that things might be about to change big time. And what does that $100 million represent? Well, it's the headline everyone's been waiting for. NIO's first ever quarterly profit. Can you believe it? It feels like a massive validation of their whole strategy, right? Strong sales, better margins, it's all coming together. But, and this is a big but, it begs the real question. After 11 long years, is this the start of something real and lasting? Or is it just a quick gasp of air before going back under? Okay, to figure that out, let's break this down. First up, let's look at the bull case. What are all the reasons to be optimistic? Well, it really boils down to how NIO is playing the game. They're not just trying to sell more cars, they're trying to build this technological moat, this edge that their competitors just can't easily replicate.
And that strategy? It's built on three main pillars. First, they're making their own chips. Second, they've got this incredible battery swapping network that's totally unique to them. And third, they're wrapping it all up in a slick software and ecosystem. The whole idea is to control the entire experience, from the silicon all the way to the software. That's how you create that premium feel and justify that premium price.
So let's geek out for a second on that first pillar, the chip. It's called the Shinji NX9031. And look, this is not just some off-the-shelf component. We're talking about a 5-nanometer powerhouse. That's a first for a Chinese car company. It's designed to go toe-to-toe with the big dogs, like NVIDIA. And you know who's noticing? Investors. Their chip division just landed a cool $330 million investment. That's some serious validation for what was, let's be honest, a really expensive and ambitious gamble. Okay, now for the battery swapping. Check out this number, 2,073,500. That is how many battery swaps they did in just a 2-week holiday period. This is not some little experiment, folks. This is a massive, working, real-world infrastructure. It's their unique answer to range anxiety and long charging times, and it is a massive, massive competitive advantage. So if you're a NIO bull, here's what you're pointing to. You've got the brand new, high-margin ES9 flagship SUV dropping in April. You've got a fresh partnership with an automotive giant, Bosch. The sales momentum they've built, it's still going strong. They've got a clear runway to expand into Europe, and get this, down the line, they might even start licensing out that fancy chip technology. I mean, you put all that together, and it's a pretty compelling story for growth, right? But, okay, it's never that simple, is it? Let's flip the coin and look at the bear case. What are the massive roadblocks standing in NIO's way? Because, look, hitting profitability for one quarter is one thing. Actually sustaining it in this market, that's a whole different beast.
I mean, just look at the competition. BYD isn't just a competitor, they're a titan, holding almost 16% of the entire market. It's insane. And then you have NIO and their main rival, Li Auto, duking it out for scraps, each hovering around 4.5%. The gap between them and the top spot is just immense.
And this really highlights the totally different games they're playing. You've got BYD, the giant of scale. They make everything themselves, they pump out insane volume, and they are the ones starting and winning the price wars. Then you have NIO, the premium high-tech player. They're all about the brand and the ecosystem, but man, that is an expensive way to run a business. It's the classic showdown, right? Scale versus specialization.
And here's another thing that should make you a little nervous. Product concentration. In January, a whopping 65% of all of NIO's deliveries came from one single car, the ES8 SUV. Now, sure, that's great for profits right now, since it's a high-margin vehicle. But putting all your eggs in one basket like that, it's a huge risk. Any little hiccup in the supply chain, like that audio chip shortage they had recently, can suddenly become a massive problem. So let's recap the bear case, the things keeping people up at night. You've got that over-reliance on one single model. You've got the entire Chinese EV market, which is actually slowing down. You've got a brutal price war being waged by BYD. You've got the looming threat of EU tariffs. And on top of all that, the first quarter is always slow for car sales anyway. Phew, that is a lot of headwinds to be flying into.
All right, so you've got this compelling bull case all about innovation and technology.
And you've got a very serious bear case, grounded in the harsh realities of the market. What happens next? Well, the next few months are going to be absolutely crucial. We're about to find out which of these two stories is the real one. So, what are the folks on Wall Street saying? Well, on average, the consensus is a buy, with a price target around $6.73. But look closer. The range is huge. You've got the super optimist at UBS calling for $8.50, while the most pessimistic target is all the way down at $4. That massive gap tells you everything you need to know about how uncertain and high stakes this moment really is for NIO. Okay, so if you're following this story, pull out your calendar. Here are the dates you need to watch. March 10th, that's the earnings release. We'll see if that profit number is real. Then, April 10, the big launch event for that critical ES9 SUV. And finally, June 1st, that's when deliveries start, and we'll see if people are actually lining up to buy it. These aren't just dates, they're data points that will give us some real answers.
Which brings us back to where we started, and to the final, huge question. NIO has finally hit that crucial milestone. They've tasted profitability. But in the most cutthroat market on Earth, squaring off against a giant like BYD, is a tech edge and a cool brand really enough? Is it enough to build an empire that lasts? Honestly, that's the billion-dollar question. And the answer is going to define the entire next chapter for NIO.